I'm Sarah Borkson-Keeter with NAREITsREIT.com, and I'm here in Las Vegas at REITWorld 2015, NAREIT's annual convention for all things REIT. I'm joined by Steve Buller, Portfolio Manager at Fidelity Investments. Hi, Steve.
Hello.
So about a year ago, you predicted that you would see an increased activity in transactions and restructuring in the industry this year. Has 2015 lived up to your expectations, and what about next year?
Yes, I would say it has lived up to our expectations, especially given the discounts to net asset values that we've seen throughout the year. We've seen companies and boards start to take advantage of that. In a sense, we've seen some spin-offs. We've seen more asset sales and using some of the proceeds to buy back shares. And we've also seen some more privatizations. I think if we continue to see this valuation discount, that is the disconnect to where private real estate values are and public market real estate values are, you will continue to see this type of, what I would term better, corporate events rather than restructuring.
So as you invest in real estate around the world, how would you assess the level of enthusiasm for the REIT approach to real estate?
Yeah, there's nothing magical about the so-called REIT approach. As you know, the REIT, all it is in most countries an advantageous tax structure that puts prohibitions on some activities that individual REITs are allowed to do. So in a sense, we don't get caught up in the REIT approach. Rather, we just look at listed property companies, some of which are in a REIT structure because that's the most advantageous tax structure in that country or region, rather than a REIT approach. In a sense, for a REIT to do things right or to be a good REIT, you need good properties, you need good management teams, you need good capital allocation by those management teams. So in and of itself, my message is that just by having a REIT structure doesn't mean it's the REIT approach.
And do you have any thoughts about how interest rates will impact REITs for the coming year?
Can you believe that's the first time I've ever gotten that question? No, but in all seriousness, one, as far as short-term interest rates go, I just hope the Fed would raise rates so I can quit having to answer the questions, what's going to happen to the REIT market when the Federal Reserve starts raising interest rates? Because, as you know, and there's many studies out there, and we've performed our own, that the movements of either short or long-term interest rates historically has been very little correlation to the performance of REIT shares. That's not to say that we haven't seen in the last 12, 18 months, rough time frame, slightly higher level of correlation with interest rate movements and the performance of REIT shares. So in a sense, I wish we would just get this out of the way so we can concentrate on what's more important, and that is the fundamentals of the real estate group, the capital, how they're raising it, the cost of that capital, and what they're doing with it. And lastly, the valuation. And in this case now, in our opinion, there's a slight disparity in terms of valuation, as I mentioned earlier, between private real estate values and where publicly listed shares are trading on average.
Okay, well, thanks very much, Steve.
Thank you.
And for more news and information on REITWorld 2015, be sure to visit REIT.com.